What's good, YouTube? Welcome back to the channel. We're actually on the way right now to the mall. We have a trip coming up to Europe. We're gonna be hitting up Italy, France, Spain. It's gonna be a trip of a lifetime. You're gonna see the vlog coming very soon for that. We're picking up some clothes right now, but you guys who are part of the private mentorship have been waiting on this video where I'm gonna be showing you guys exactly how to scale a small personal account. Now, don't get me wrong, prop firms are definitely a huge tool, something that comes included when you start the private mentorship. But I also think it's valuable to understand how to grow a personal account, and what better way to do it than starting with smaller capital, an amount that really anybody can invest comfortably and be able to start actually building that belief that you can, you know, double an account or more. And in this video, I'm going to be showing you exactly how I did it using my specific Liberty strategy that I teach. This specific strategy has helped so many of my personal students get not just funded, but actual payouts. We even have members that have generated multiple 5 figures in payouts via prop firms with the strategy. But as I've talked about in prior videos, I think that at some point you're gonna wanna not maybe necessarily fully transition into trading personal accounts, but I think that it's a separate skill to be able to manage personal accounts mentally versus trading a prop firm. Because a lot of people, when they're in prop firms, they know, hey, there's not really any capital on the line, just whatever I invested into this account. You know, you probably got your refund back once you passed your phases and got your first payout. So really, you're playing with house money. And again, I do encourage you to take advantage of prop firms, but when it comes to your live account, it's real money, real time, and psychologically, it's just a different space to be in as a trader. And so I think that you don't want to have holes in your game when it comes to becoming a day trader. I think you want to take advantage of knowing the mental landscape of what it's like to trade during challenge phases, what it's like to manage a funded account, what it's like to actually trade small personal funds and scale your way up into larger personal funds. So I started a small personal account using Trident Markets, and I want to shout out Trident Markets because they have been the official sponsor, the official go-to broker for myself and the private mentorship program when it comes to finding a reliable broker that we're able to trade our personal funds on. And I started a $500 deposit recently, and we actually have been trading this account. Technically, it's been like about a week, but really it's been about just 4 trading days where I was able to take this $500 account and more than double it to about $536. So in about 3-4 trading days, we have doubled the account. And no, I didn't take, you know, a risk where I'm risking half of my account to win 1 or 2 trades. This was an approach where we slowly scaled with a pretty aggressive risk, but not really gambling it either, right? Not risking the whole account per trade or anything crazy like that. Simply scaling the account. So I want to show you this account here. This is the $500 account balance that we started. And as you guys can see, and I'm going to be breaking down this account in a lot more detail, but we took losses. I had, you know, sometimes even a 3-4 trade losing streak, and we were still able to, at the end of those 3 or 4 trading days, be able to double our account using some of the principles and some of the strategies that I want to be talking to you guys about in this video. All right, so we just got home back from the mall, and we're gonna transition here onto the computer because I want to show you guys all of the real intricate details about how exactly we got this job done as far as flipping this $500 account double. So we're going to be diving into some concepts such as what were the actual technical analysis concepts that I used to catch the setups, what type of risk management was used to actually make the numbers work, and of course the last thing is what type of frame of mind I'm in when I'm locking in to actually do this account flip. Number 1, what is our strategy as far as how we're actually going to operate in the market? So if you follow me closely, you may already know that all I trade is NAS100. And what I look for is for my signature strategy called Liberty, which I teach in the private mentorship program via AkashX. So if you actually want to learn the strategy in depth, if you want to be able to duplicate the exact same models that I show here, then definitely hit the links in the description. Make sure that you guys get on board with AkashX so you can learn how I trade exactly how I trade. But for this video, I am going to give away a little bit of sauce as far as what are the main setups that actually helped me accomplish this. And so I want to highlight just 3 setups out of all the different trades that I took in those couple of days, the ones that really gave me the most return. So based on that $500 account balance that I started with, these 3 setups actually gave me $400 worth of profit. Now, of course, we incurred some losses along the way, and we actually had some other small winners as well. But again, when it was all said and done, these were the 3 main setups that really helped me accomplish this. Now, this first setup was on March 4th, and it was during New York session, shortly after the New York Stock Exchange opened, which is highlighted by this yellow line that we see right here. Now, the coolest part about this trade specifically is I actually called that same trade as a signal for my private mentorship students. So we can see here on our Akash's back office, this was the before picture of the setup when I sent it out to everybody. All of the different TP levels, stop loss, all 5 TPs getting hit for a total of a 4-to-1 risk to reward ratio. Now, looking back at the actual chart of this setup, basically what we saw here was one of my favorite types of setups, which is called the reversal model that I teach. And what I loved about it was that we also got a very nice liquidity grab prior to the entry, which is very important when we start to understand why NAS does what it does. So we can see here, price had kind of rallied to the upside during London session, and right at New York Stock Exchange open, we saw that we had that nice liquidity grab, price popping up, taking out those early sellers, and then we got that drop back into the range of this red box. So essentially, we're looking and paying attention to this red box to look for setups where we're either breaking out or faking out and reversing into that red box. And in this scenario, again, seeing the intention of the market grabbing liquidity and actually shifting momentum very aggressively back into the range is why I called that setup. The final target was a 4-to-1 risk to reward ratio, which was actually a bit more in profit from where I ended up exiting my personal position here. So I closed at a 3-to-1 risk to reward ratio, which was literally right here. And a part of my reasoning was I saw that we had this low of the red box here, and typically whenever we don't have price really interact with that low or high during London session, or if it's maybe the first time that it's going to interact with that point during New York, we typically see a very strong reaction. So being that this was a very fresh account and I wanted to secure, a very strong win to kind of get things rolling right off the bat, I was very comfortable with just sacrificing that extra R multiple, closing a 3-to-1 here, because as we saw, it did end up recovering basically back to entry right after. Now, in hindsight, of course, this was a trade that absolutely continued to melt forever. So this trade could have literally flipped my account in one trade very easily, like completely doubled my account in one trade. But again, hindsight is 2020. We never really know exactly how all these setups are going to really end up. So I tell people all the time, the strategy is we're going to find our entries. We know where our stop losses are. We're going to try to target anywhere from triple to quadruple our risk. And if the market is showing us that it wants to continue running, then fine, we can leave the position open. But if we know that we might expect some turbulence, some reversals, you're better off making sure you secure what you can before you get a nasty pullback how we had there, because this would have been much better to grab that $150, 3% or 3R multiples, right? Here than it would have been to potentially break even right up here. Now, moving on to setup number 2. This was a 2-to-1 risk to reward ratio trade that I took here that made me about $100 on this setup. This was a tricky day in the sense where we started seeing price break below the low here during our New York session window. I remember we were on a live session together with all the students, and this was a tricky spot because again, we're seeing price really chopping back and forth at this price level. And so I left it alone initially during the early New York session. It ended up running really well for the sells, but in the moment it was just very uncertain. I had let everybody know on the session that, hey guys, look, we're gonna let this thing ride out. If we get price to come back into the range, I would be looking for a reversal model style trade here and looking to take this up. Now, this was a trade where I could have, again, also made more profit in hindsight if I would have just allowed the position to continue. So I bring that up because, even with a lot of experience and even having a great strategy, trade management is one of the more difficult things to really understand and kind of improve on as a trader. And for me, again, even with me looking to flip this account, anytime I can secure profits, I want to do so, right? So my risk management and my trade management had to be something that was, looked at with a very strong focus. And at the end of the day, I'm not going to cry over trying to make a little bit more profit whenever we have these really aggressive pullbacks. So in this scenario with this trade, I had initially entered once I saw that we started breaking and closing above the line right above this red box area here. And so once we started getting our entries, I was about almost, $50 in profit or 1R multiple. And we ended up coming back down way below entry, getting somewhat close to stop loss. And then we ended up recovering up for about a 2% gain here, or a 2R multiple gain, I should say, here. And so at that point, I was very happy with seeing price kind of slowing down here to just take my profits, exit the position. And well, what came right after, as we see here, was another massive spike down below entry, which would have hit my break even. And we would have continued to sit around there for quite some time until eventually then it really broke and made more profit. But again, in the moment, I was very happy to see that I could secure that 2R multiple before having a massive spike multiple times close to stop loss, and potentially again saving myself from another break-even scenario. Now moving on to the last setup that I wanted to cover, and this was during NFP. So this was a very tricky day to operate in the markets. We saw, especially with my strategy, many different times where we could have taken a lot of different types of positions here. And that's the tricky part about it. Whenever we're trying to trade during a heavy news day such as CPI, FOMC, NFP, I would even say out of all the news events that I've noticed my strategy not working so optimally would be during NFP on Friday. So I was very conservative on this day to really try to, catch especially the early moves around that NFP time. So that's these initial spikes that we see here. I typically like to really allow the NFP morning to just kind of play around, shift structure at least 2-3 times before really deciding the direction that it wants to continue to go to. And so that's what led me to taking this setup here. Now, the other two setups were reversal models that I caught. This one was actually the breakout model. Again, we saw that initially that NFP candle kind of came up, then pushed back down, then came back up, and then finally started pushing back down. So were there many different entries? If all my students that are watching this, you kind of know how the strategy goes. There was many opportunities potentially for us to catch trades on both sides, but I didn't trust anything in that market that day until later in the day, when I know that once we've shifted structure at least 2 or 3 times, then typically the market likes to really move in the true direction that it wants to get to. And so essentially for the breakout model, I see that price came up, started breaking to the downside, gave up another little pullback, and then right here I said, you know what, if I'm gonna pull the trigger at all here, it's gonna be here. We've already seen price wick the high multiple times and continue to reject, and so if I'm gonna pull the trigger, it's gonna be now. And I was looking at some liquidity targets. If we go to the higher time frames here for a second, we had the next major lows on NAS100 around this 19,910 price point. We've seen NAS all week long, really since the last couple of weeks, continue to make new lows in the market. And this was one of those lows that I knew we could target as liquidity if we were bearish. And so again, zooming back into the setup, I waited for price to break below the red box area here. Price tried pulling back, rejected again, took the entry here. And at that 19,910 price point where we saw that major liquidity was exactly a 3-to-1 risk to reward ratio, bagging me about $150 on that trade, where I then exited. And then again, we got a crazy pullback very close to entry. So if you notice, all 3 of my main setups that made me the most money out of all of the ones that I've taken, I took my profits at around 2 to 3 times my risk before price reversed very crazy, and then it ended up going for more. So again, it depends on your perspective of how you look at things. Someone could say, oh, you missed out on so much more profit than you could have had. But then again, risk management wise, trade management wise, I also prevented myself from taking 3 break evens that could have been resulting in all $0 versus making $400 on just these 3 setups alone. So from a technical analysis and strategy mindset perspective here, notice that I'm trading one asset class, I'm trading in one session, and I'm trading really one specific strategy. So when we're trading 3 or 4 different pairs, when we're trading during London session and then during New York and then during Asia, the more that you put on your plate and the more that you have to try to calculate and worry about, I feel the less focus and the less you can really optimize something. So my first tips, if you really want to scale a small personal account and really see it grow aggressively, at least from a technical analysis and strategy perspective, is that we want to have an asset class that we're trading that is very aggressive and that can catch really good risk to reward opportunity potential trades. And so for me, trading indices, more specifically NASDAQ, really gives us the best of both worlds. We're able to get a very aggressive and fast moving market that gives us great risk to reward setups. And with my LBRTY strategy specifically, we're able to time that market very specifically to make sure that we capitalize on those very powerful moves. Now, the second thing that I did to double my small personal account in just a few trading days was understanding my risk management plan. There's really misconceptions around how you should risk manage. And at the end of the day, I am not a financial advisor. This is not financial advice. And you have to understand that with trading, this is a very risky way for you to multiply your money. But if you're on board, if you want to actually go and do this, you'll realize that, of course, when you're managing very big capital, you're going to hear things like, hey, you should be risking 1 to 2% max per trade. Now, also, if you're trading prop firms and you're passing challenges, you're managing a funded account, you're also going to have a unique approach to how you risk manage to stay within your daily drawdown limits, hit your profit targets, etc. So please understand that there is not a one shoe fits all risk management approach when it comes to trading. It really just depends. What is your goal? What type of environment are you trading in? What type of account do you have? And so we're going to tailor this risk management specifically to an aggressive small account flip perspective. Because let's be honest, if you're going to be trading a $500 account and we're going to be risking 1% per trade, that's really risking $5 to make $5, $10, $15 at most per trade. And if that's in your goals, if you don't really care to make that much money from trading and you just kind of want to build your skill, then by all means, you can definitely do that. However, I think that we want to make trading a little bit more meaningful. And so to be able to take $500 all the way to $1,000 in just a few days, I feel like that's a really great spot for a lot of traders, especially beginners, where you'd want to do that, right? You'd want to be able to say, man, you know what? I doubled my money in just a few days and I made $500 in basically less than a week. Now, for perspective, I've had some of these days where I made $150 in about 15, 20 minutes in a trade when I used to work for $25 an hour in a job that I didn't like. So of course, when you're trading, you're gonna have very big aspirations to live a lavish lifestyle, you know, have an exotic car, live in a penthouse, and do all these things. And yes, even though very possible, obviously with a small account, you're not gonna make all those dreams come true with just $500. However, I believe that being able to flip a $500 account really teaches you a lot about how to actually find an edge in the market that works consistently, how to really get tight with your risk management and trade management, and then also build the psychology, right? Being able to get through all of the mental hurdles of fear, FOMO, greed, and really just, you know, that elevated heart rate when you know, like, man, if I make the wrong moves here, I can easily blow these $500. So if you're able to put yourself in a spot where you can manage these $500, then you will build up the skin in the game that you need to be able to manage thousands, 5 figures, 6 figures, etc. For a lot of you guys, you may be looking to trade something more like $100, just a smaller balance. And yes, you can do that, obviously, and you know, still keep that 10% risk per trade approach that I'm going to be talking about here. But in this example, I wanted to do $500 because I feel like even though it is a decent amount of money, it's an amount of money that a lot of people can't afford to put into an account. And I think that making another $500 in a few days is pretty attractive to anybody, again, who is at a beginner level of trading, who isn't taking advantage of, you know, massive capital opportunities like prop firms. So again, we're going to use the exact example of what I personally did, having a $500 balance. So again, we're gonna start here by doing a 10% risk per trade, meaning that each trade we're gonna be risking $50. If we hit stop loss, we're losing 50. Now, an important element to my trading is understanding the power of risk to reward. So if you notice on some of my top setups, we made 2 to 3 times as much as what we risk on just that one opportunity alone. So we had trades where we risked 50 and made 100, and we had 2 trades where I risked 50 and made $150. Now, the important thing about doing that is that whenever I did go through a losing streak, if you guys actually see the account balance going up and down, fluctuating, there were times where I was down, $100, $150 on the account. But whenever we have even one of those really great trades, it absolutely recovers all of those losses and then some. So of course, in my opinion, having a really solid R to R when it comes to your trading system, not only does it help with being able to recover from some drawdowns, but even psychologically, it just puts you a little bit more at ease knowing that, hey, that next big trade is rolling around the corner that can help me get my account back on track and really push it forward. Now, the great thing is with my approach as far as my LBRTY system, which is not just a trading strategy on the technicals, but really the mindset and the risk management approach, you can really translate this into a prop firm challenge as well. If you guys really look at it the same way of 10% per trade is kind of the same thing as risking 1% per trade on a prop firm challenge. So essentially, this same type of performance that I'm doing to basically double my account on a personal account is the equivalent of me passing a phase 1 in just a few trading days. And that's really encouraging if you guys still want to go the prop firm route at the same time as you build your small personal account, or just in a different season of your trading career. I actually made a video very recently comparing brokers and prop firms that you guys can check right up here if you want to go check that out as well right after. But again, getting back to the actual math of how we accomplish this goal is understanding that 10% risk is a lot in the sense where we really have 10 opportunities to really get the account moving in the right direction. And so every trade that we take does have to have an importance, right? We cannot be taking random trades. We cannot be taking impulsive trades. We really need to have the discipline to be able to locate with a strategy, just how I showed you, where we're very purposefully taking entries that make sense based off of data that we've back tested. So you have to look at each one of these trades that you're taking at 10% risk. Very, very precious, let's say bullets in a gun, right? If you're at war and you got 10 bullets left, you got to make every single one count. So yeah, obviously, is there going to be a little bit more pressure knowing that your risk is pretty high per trade? Of course, but again, mathematically, this is actually how we can accomplish the goal of doubling an account in just a few days. So my framework mentally is like this. If I know that I have a very solid strategy and I'm just very disciplined and patient to wait for them to set up, even if I lose 2 or 3 trades in a row to start off this account flip, I know that again, because of the risk to reward element of the strategy, I can easily recover and get back into the profit zone in just 1 or 2 trades. So once again, I'm gonna pull up right here on the right side, the actual account balance and all of the trades that we started taking. And you will notice that, trade by trade, I'm keeping my losses at anywhere from $50 to less, right? Some of those trades, I'm even clipping them a little bit early at minus $40, minus $25, minus $30. So in general, there are going to be certain setups where when you really get to know your strategy, you kind of see, this trade does not give me the vibe that it's really working the way it's supposed to work when I enter. So I'll clip those trades a little bit early. Now, it's hard for me to really recap every single position that I took on that account. But for the most part, every time I entered one of those trades, it was following the strategy and the concepts that I teach, but seeing that, this specific entry, it's not looking like it's behaving the way it's supposed to. So I'm going to clip it early. And most times, all of those trades that ended up being those $20, $30 losses would have been $50 losses. I don't think many of those setups really ended up turning around and going into the profits. So I didn't regret closing much of those trades at all early, because it's not like I was closing trades early and then it started going back into profit. A lot of those trades that closed at less than $50 were me preventing those trades from actually being $50 losses. And so being able to cut your losers short and letting your winners run is something that you'll hear from people like Mark Douglas and really a lot of people that, talk about trading psychology and risk management. And you're seeing it play out in real time on this specific account. So the one thing that I always preach that you guys will see on that account, I think I had maybe one trade that was about a $60 loss, so slightly over 50. But for the most part, no trades really exceeded much more than a $50 loss. If not, it was actually smaller. And that's the part that you have to be very clinical about. You cannot leave any room to have a $100 loss, $150 loss. It's not worth it. I'm telling you right now, if you have a system that shows you that it does create great setups, you need to make sure that you never lose more than your planned risk. And in this case, a 10% risk is already really high. So you do not want to be, in that territory where you're trying to avoid losing $50 to hopefully have that trade turn around in your favor. And it ends up being a $70, $80, $100 loss, because you're just going to have to work that much harder on your next setups to recover what could have been half the damage. But because you are trying to really hope and impose your will on the charts, now you pay the price. All right, guys, so a very quick bonus tip that makes all the difference in me being able to actually make this account flip possible was choosing a broker that really allows you to trade properly. And so that's why I want to give a major shout out to the sponsor of today's video, Trident Markets. They are the broker of choice for me. At the end of the day, you guys have the option to always choose where you guys want to trade from. But for me, I love Trident Markets because of the support that I've been able to have since I started my relationship with them, being able to have lightning quick deposits and withdrawals. And most importantly, when I'm trading NAS100 on this broker, I'm having super tight spreads. There's really nothing more annoying than being able to be in really good setups where the spreads are taking me out of positions or putting me into bad entries. And so I feel that with Trident, it was a very crucial factor in me actually making this account flip possible. Again, because of things like how fast I'm able to deposit and withdraw, how tight the spreads are for NAS100, and so much more. So please check the links in the description where you can get started with Trident Markets using my personal referral code below. And be on the lookout via this YouTube channel and all of my other social medias where we're gonna be offering very special deposit bonus offers for every single person that is a sub to this channel and one of my personal students to really make the most out of your trading experience utilizing Trident Markets. The third and final factor of how we were able to double a small personal account in just a few trading days was having the proper psychology and mindset approach. Now, there's really three different words that stand out to me that make all the difference. Again, whether you're doing small account flips or even just trading any other type of accounts, you need to have these three things. And I'm gonna go in a little bit of detail of what this exactly means. But we're looking at being focused, disciplined, and prepared. So when it comes to being focused, what that really means is that you cannot have distractions. Whenever we're going to be risking, especially 10% per trade, and really taking every single setup very seriously, you need to understand that we cannot be really multitasking too much, such as doing things like driving while trading. And don't get me wrong, I was multitasking probably sometimes on some of these trades, but I'm just telling you, for the most part, when I had my biggest winners and when my account was doing the best, it was when I was absolutely locked into what I was doing, right? You do not want to be jumping into a setup, seeing your trade kind of go into profit and then being like, oh, I'm just going to go and watch TV or play video games, or I don't know, just like hop on the phone with somebody and just not being really, again, focused on executing this setup. The good thing is with trading NAS and trading within New York session, a lot of the setups that I'm in are not taking me 3 hours, 4 hours a day. Right? So if you have a swing trading approach where you're having much wider stop losses, much smaller lot sizes, it's a different thing. But this is really an approach where a lot of my setups were in and out of the market in less than 30 minutes mostly. So if I'm going to be able to make, let's say, $50 to $150 in one trade setup that doesn't even last an hour, I can really dedicate my trading session and that time to just really pay attention to what the setup is doing. Because in reality, the markets are going to move pretty fast, especially NAS100 And right now, with the type of conditions that we have with Donald Trump in office and all of the news going on, the markets can spike, the markets can do a lot of different things. And this was actually achieved in an NFP week, right? And typically people, they'll associate NFP week with a really difficult market to trade. You know, you should probably avoid NFP week, all these misconceptions, right? But again, you avoid all that noise by just being focused, right? Knowing what our setups look like, knowing how much we're going to risk, and then just paying attention to what the charts are telling you. Now, the second thing is being disciplined, right? Disciplined is kind of what I was just talking about right now, really specifically with entering setups that only follow the strategy that you're really implementing, and also really not allowing your risk to go more than what you plan. I think if you do those two things, you're going to be in a much better spot. Again, I have the strategy built that I have for a reason, because it's been back tested. We've seen the data. We've seen how many great setups it produces daily. And so why would I want to try to trade setups that are not in alignment with that? Setups that may be more random, sporadic. They may look pretty good in the moment, but if you really go back, you're just making trading harder by not sticking to a consistent plan. So the discipline factor goes into that, because again, a lot of the times when we break our trading plan as far as not trading our technical strategy is because we see a setup that looks good in that very moment. And then if you end up losing that trade and you go back, you're like, man, why did I take that setup? That wasn't really part of the strategy. That's not what I've practiced and back tested for so long. Don't let the impulse of you seeing something that looks good, because you'll always hear trade what you see, not what you think, right? And what we want to see is a strategy that we've practiced. From a risk management approach, being disciplined just simply means that if you're going to enter the market where you're going to enter, you have a stop loss where you have it for a reason. You're risking that $50, for example, that 10% for a reason. So you cannot go and say, you know what, I'm going to change my stop loss because I think it'll turn around, or I hope it turns around. You know, I want to make sure I avoid this next loss. So I'm just going to switch up the plan because I just have a feeling it's going to work out for me. Anytime you guys make decisions based off of what you think or what you feel, I feel like you're going to be in a bad position. For me, trading is always about building systems and a set of rules that prevent you from self-sabotaging. All of the money I've ever lost in trading, all of the losses and failures that I've had in my trading are when I just think that I can outsmart price action. When I want to go and try to hope that things work in my favor versus actually just sticking to a rule-based system and letting probabilities play out. From a discipline perspective, you cannot fall into impulse. Impulse is the biggest enemy that I've personally ever faced in trading, and I think anybody has ever faced in their trading. So using things like pending orders, using things like fixed lot sizes, even some prop firms will set rules where you will literally be locked out of your account if you lose a certain amount of trades for the day. I think whatever way works for you to know when to trade and when not to trade is super important, again, to staying disciplined. And the last word here is being prepared, right? I think if you are in a position where you're caught on your heels or you're trying to play catch up with the market, you're at a major disadvantage. And what I mean by that is I want to be able to mark up my charts and already envision particular scenarios with my strategy playing out either the night before or maybe an hour, at least half an hour before you actually start trading, to say, okay, you know, based on my strategy, these are my entry zones. These are the different potential ways the market can start to behave around these areas. And I'm going to be prepared for when that scenario happens. I will confidently take a trade and put some risk on the table in those scenarios. Now, I personally run a Sunday market outlook call with one of my other educators here in the private mentorship named Brent Badal. He also trades NAS100, and we always on Sundays have the habit of marking up our charts, looking at the week and saying, hey, these are most likely what we see. This is most likely what we see is going to happen for the week as far as NAS100. These are some key levels. These are some very important whole numbers. And we start to basically just get in the mode that we are ready to trade for the week. So again, doing that on a weekly basis, but also a daily basis before your trading session is crucial. Again, you don't want to not know what's happening with the markets, you know, until you jump in, right? You don't want to just jump in and then start marking up and trying to jump into setups in just a couple of minutes. If you do that, you're gonna be a little lost, right? You're feeling like the market's moving without you. You're trying to play catch up, and that's just not gonna work. You wanna be ahead of the game. You wanna wake up and you wanna mark up your charts and do all of that at least half an hour or more before you actually start trading. So you can, again, envision the setups that you potentially see so that when they roll around, you're now basically letting the market fall into your hands instead of you trying to chase the market. I want to thank y'all for watching today's video. I hope that you found massive value that's going to help you flip your next small account. Remember to check the links in the description of this video so you can get started with Trident Markets today. I'm looking forward to seeing all the subs and students of mine applying these strategies into your small personal funds to see what you guys got. So make sure to tag me on Instagram, on YouTube, to make sure that I can highlight you guys for your success using these concepts. And lastly, please make sure to like, comment, subscribe, and turn on those post notifications so you never miss another video from me on this channel. And with that said, let's run it up.